Good Monday morning, everyone. We're on the floor of the New York Stock Exchange with Jim Cramer. All right, Jim, a lot of fiery political rhetoric over the weekend, but the market's holding up fine.
I want to distinguish fiery from the notion of a plan. The president has a plan that I think is very similar to when I was a judge in The Apprentice. He doesn't really care what people think. He makes his decisions. I think that there's enough of the electorate that doesn't disagree with him that he can do that. Now, the president, I think, feels that the countries in the G6 take advantage of us, with the exception, or I say G6 because I think he'd rather pull out. But I think he feels that he wants to go back to G8 because he doesn't think the Russians have done anything bad to us, and he thinks that much of Western Europe has asked us to pay for their defense against someone who they could embrace as being an ally. And, I think the mainstream media thinks this is preposterous. But I'm not about trying to figure out whether Trump is right or wrong, because that's it's beyond my pay grade. I am about trying to figure out what the stock market is saying. And I think the stock market is saying, not unlike what Rev Shark has got, who's a must-read on Real Money. What the market is saying is, hey, Trump's right. And people do not want to hear that. There are a lot of people who are ideologically based thinking about the stock market. I can't afford to do that. I have to try to figure out what's really going on, not what my politics say is really going on. And, the market, there were a lot of people I know who were betting that the market would be down huge today because of the president's view on Trudeau. And the fact that it wasn't is not a sign that the president's irrelevant. That's just not true. Even if he's irrelevant, the stock market would still go down. It's a sign that the market thinks the president's right and that it's good for business. And that's antithetical to what a lot of people in the mainstream media want to say. But I'm not saying that it's true. That's not what I do for a living. I'm saying that's what the market's saying.
So then can we say that the market has warmed up to the uncertainty over these tariffs? Is that an accurate statement?
No. The market's in favor of what Trump's doing. The market says that as long as Trump is making it so that the G7 should recognize that it has to pay its way versus the Russians, then it's good for business. The idea that politics should ever be good for business is something we're all not used to. That we have to get used to it because the president's a businessman. And that's what the market says. They like it. Now, if the market were down very big, then they would be getting used to the uncertainty, meaning that the uncertainty is bad, and every time it goes down, we get used to it going down. But there's no uncertainty. There's just a recognition that the president thinks that we are a great country that doesn't need any allies, and that the allies have to pay their own way. And that's a new formulation that ever since the Marshall Plan, no one ever questions. We've never been on the other side of West Germany. Since it was West Germany, and now Germany joined, East Germany and West Germany joined, and what he's saying is, okay, now that that's happened, there is no enemy to speak of. So, and if you think there's an enemy, then go buy missiles. Go be like Israel. And this is a different paradigm, and the market's picked up on it, but the mainstream media hasn't picked up on it.
Interesting coming out of that G7 to see Germany buying USG for a $7 billion deal.
Here's an example of our economy being strong. And you would not buy a gypsum board company, and the XHB, thank you, Matt Horwey, wouldn't be breaking out if you didn't think that interest rates going higher is going to kill housing. So the market's adopting Bob Toll's view on his most recent conference call that interest rates haven't gone up enough to hurt housing. That's what the XHB is saying, and that's what the U.S. gypsum bid says.
Interesting. Berkshire Hathaway's Warren Buffett owns a 31% stake.
Yeah, but he wasn't happy with management. He didn't like them. He was happy to get rid of it, but he does own Clayton Homes. because it just seemed like it was not. The company was not responding to the way Buffett likes to manage things. He owned a third of it, but the fact is that it's like when the French bought Certainty a long time ago, big Philadelphia company, when they felt that the housing cycle was good, and it was. So I think that one of the things I was talking about on Squawk on the Street is there's a tremendous belief that things being good has to mean that the party's almost over. And what I'm saying is that things being bad, meaning that the market's narrow, is when you think the party's almost over, not when you think things are good. So breadth good, foreign buying of companies good, and again, I'm not saying that I think it's good. I'm saying that the market says it's good, and that those who make the decision that they themselves think it's good or bad, I'm just saying, I'm interpreting what the market is doing, and the market is saying housing's good.
Jim, last Friday you interviewed Oath CEO Tim Armstrong on Mad Money. He's doing this push into AR and VR. What did you think?
I think that it's an $8 billion company buried within a much larger company, and that the changes are about 5G, and 5G could be revolutionary. I mean, 5G could mean the end of the hegemony of the cell phone companies with the telco providers. That would be pretty amazing. 5G may mean that more artificial intelligence, more augmented reality. 5G could even threaten the cable companies. Maybe that's why we're seeing cable companies make big bids. So, or perhaps make big bids. So 5G is driving a lot of what Oath is talking about.
5G also one of the big reasons behind the Sprint T-Mobile decision to merge.
Well, you need enough money to be able to do 5G, and there are some people who regard AT&T and T-Mobile merger as being anti-competitive. But when I interviewed Mr. Del Rahim last week, he did not say that. He said he would look at it, but he did not point blank say that it was not going to get approved.
We'll watch for that decision on Tuesday. Jim, who do you have coming up on the show tonight?
Well, we're going to be looking at valuation of Twitter and trying to figure out what it's really worth. And I think it's definitely worth watching since a lot of people are involved with Twitter.
All right, that's tonight, 6 p.m. Eastern on Mad Money. And Jim, we want to remind everyone you have your monthly Action Alerts Plus call Wednesday at 11:30. I'm sure you're already working on it for many days now.
I spend multiple hours on it.